All right, guys, welcome back to We Talk Money. Man, stocks are up, crypto's up. I think over the last couple of shows, you guys basically called the bottoms. What's going on, guys?
Hey, yeah, it's been a hell of a month. We've got some big moves out there. We caught a few, so it's been a good start to the year. We just got to keep this momentum rolling. We've got a lot more time left.
If anything, it's been a good, boost in morale. It's been a rough couple of rough year, 2022. So, if anything, we don't know. We don't know if the bottom is in or not. We called it maybe short term, but obviously anything can happen from here. We'll talk about that today, I'm sure. But yeah, it was definitely fun for a little bit while it's lasting. That's for sure. I'm sure it was in crypto too.
Yeah, Bitcoin on the year basically had a 50-ish% move from the lows in late December. Basically went from about 16K up to about 24K and have been taking a pause here over the past couple of weeks. And the correlation between Bitcoin and the NASDAQ has really just been really incredible. I mean, right now it seems like all risk assets are kind of trading together. We've got, some interesting stuff with, inflation looking like it's kind of cooling off a little bit. Why don't you guys just give us a quick overview of the macro and what's happening with all the, I guess, the fundamental indicators, because, I know over the past several months, it's been kind of a mixed bag, but what's the big narrative and what are you guys seeing out there?
I mean, I don't think you can have this conversation without talking about how low the unemployment rate is right now and the quote unquote strong jobs market. Chris, you should have a Y charts link to the unemployment rate. And when you look at it in relation to history, it's pretty damn stunning with everything that we're experiencing right now with the Fed hiking interest rates. It's like everything that is supposed to happen is not happening really. Like, I mean, inflation is coming down, but unemployment, technically you would think we would see unemployment start to move higher. And maybe that's coming, but it's so persistently low that it's kind of hard to imagine it getting high enough to be super damning to the economy. So I don't know. My take is that the data is still very mixed. There's still a lot of good and bad. But as far as the labor market staying strong, that could be enough to maybe keep us kind of trotting along. Trav, you may have a different perspective on this, but go ahead.
No, I think you're pretty much on point there. The Fed is still raising rates, of course. That's one of the negatives. They raised another 25 basis points about a week ago. Fed Chair Powell was out yesterday saying he wants to do at least another 25, probably at the next meeting. Currently, the market probabilities are pricing a 25 basis point hike in March and another 25 in May, I believe, and then a pause. So that would bring rates, Fed funds rates up above 5% if they actually do go through with both of those hikes. So that is still a negative, and inflation has been cooling. That's a positive, but we get a big CPI report out next Tuesday morning. So we'll know more about that. Hopefully, knock on wood, the inflation numbers are still cooling because that was the big headwind last year. So if we can get the inflation numbers to keep cooling, that will hopefully give the Fed room to pause. And that will obviously relieve a lot of concern. However, the lingering concern and where we think the market narrative will be shifting this year is to recession in probabilities and, of course, corporate earnings, which we've talked about in some of the prior shows. We're in the thick of Q4 earnings reporting season. Right now, about 50 to 60% of the S&P 500 companies have reported, including the big tech companies, pretty much for the most part. So far, the earnings have been good, not great, I would say. Some companies have been obviously surprising on the positive side, others negative. But in general, earnings are down about 5% year over year. But the reactions to earnings in stock prices have been pretty good. We got pretty sold off by the end of December last year, and that gave room for stocks to run up. So they have been actually moving up even on mediocre earnings reports. I mean, we saw last week with big tech, some of those earnings reports, we saw spike ups in stocks that maybe wouldn't have otherwise done that in prior earnings seasons. But if you look at the data, again, earnings down, it better recover, because if it doesn't, then I think the S&P and stocks and other assets could have a hard time later in the year, especially if we do start to see those low unemployment numbers tick up. Big tech companies are still announcing layoffs as of last week. So things could change, and the market's going to be very focused on what signals are we getting in terms of possible recession, possible economic weakening. Right now, unemployment is going to keep things strong, like Nikki said. So wait and see, I guess.
Yeah. Taking a look at the charts here, taking a look at the NASDAQ. So I know back here in December, you guys were talking about potential like double bottom here around 11K on the NASDAQ. And we have moved higher, right? There has been a break of the year-long down trend line. We do have a higher pivot high in both the NASDAQ and the S&P 500. Now, again, this isn't a massive move, and we're still, not out of like bear territory. Let's take a look. We're still about 25 to 30% off of all-time highs, and we're kind of in no man's land. But this is, in my opinion, kind of the first sign of a little bit of strength, really since the markets started to sell off in January of last year, right? So we've had about a full year of a bear market where prices came down quite a bit, right? Crypto was down, Bitcoin down 75%, the NASDAQ here down 35% from all-time highs. So what do you guys think? I know the two big narratives that you guys were looking for over the past month or two that could impact the stock market was, like you said, Trav, earnings, and then also energy prices, which it looks like oil and nat gas and stuff, they've really just been selling off or been kind of flat. So I don't know. Is there anything else you guys are looking at either on the charts or in the data to kind of make a determination of, is this just a bull trap or is this a shift in the overall trend? Oh, I think we lost audio for Trav.
Let's try that again.
There we go. The good old mute.
Love that mute button. Yeah, we're watching a lot of different indicators. Particularly I'm looking at things like credit spreads. We're looking at any inflationary data, all the weekly data stuff that we get. But for the most part, financial conditions have been loosening so far this year. We got a lot of those big rallies that we're talking about, and we're looking for those negative signals. We're just not seeing a lot of them. One weakness area would be like manufacturing still, ISM manufacturing, things like that. But it may be a while before we really start to see the worst of it. And so that could give stocks more room to run. Like you said, from a technical perspective, a lot of stocks are still set up pretty well. We've had maybe some of the more risky stocks starting to get into euphoric territory. I mean, Carvana up like 200% year to date, Peloton, Redfin, all those up more than 100% year to date. So those would be areas you got to be a little bit careful. Some of the AI stocks have been hot. There's a little bit of a bubble building there. So there are some signs that maybe the market's getting a little weird. Bed Bath Beyond last week certainly could fit that category as well. We can talk about that. But yeah, I started taking profits a little bit last week on the days where we are getting euphoria. I don't want to get too bullish or too bearish, as I've said before right now, because even though technically a lot of indices and stocks are still set up potentially to keep running, some stuff has already had really big moves just in the first month of the year. And I don't think it's a bad thing necessarily to take profits on some of that, maybe leave some runners as well. But yeah, we're trying to keep an eye on everything that we can. And right now, I'm not seeing a whole lot of incremental data to get too negative about. So that's where I'm at.
Yeah, I think the title of the show is going to be, what is the new narrative, right? There's always a narrative driving the markets that everybody's focused on. And it seems like ever since ChatGPT launched, that's been where the focus is. And it makes sense, right? Because this is going to be massive disruption in search and the way that content is created. And, even taking a look at Bing, Microsoft's search engine, they have integrated ChatGPT into their search, right? So we're starting to see really cool stuff like this that is available to the public, right? I mean, this is massive stuff. But in the short term, yeah, I think to your point, Travis, about things just getting a little over euphoric and overheated, we're even seeing that in crypto, like some of the AI cryptos have kind of bucked the trend and have shown relative strength compared to Bitcoin and the markets as a whole. And I know even in the stock market, right, you guys have had some sympathy plays on some AI stocks. And so will that be enough to drive like a new quote unquote alt season for crypto? I don't see it, right? I think it's going to be kind of a short-lived little hype cycle. But again, it's hard to predict what projects are going to come down the pipeline in the future. I just think it could be something to get people excited and like reinvigorated and back into the markets. Will it give us sustainable trends? I'm not sure yet. I think that's yet to be seen.
I think that people are going to need to really stay patient through this because, like Travis kind of touched on, it's kind of hard to get right now. It's kind of hard to get super bullish and it's hard to get super bearish. It's just really, really difficult to uh, eh, get a bias going on here. And I sound like a broken record, but here we are continuing to see this lukewarm market. So I think that's going to continue to be the case for a while because even right now the market is not cheap, right? Like so it's very difficult to justify much higher prices in the S&P or even the Nasdaq, and that reflects in that trickles down into Bitcoin. So until we see significant growth, in earnings again. And we're not going to have a bad year, quote unquote, but it's not going to be great. Until we see that again, it's going to be hard to justify this like big rally in stocks. So I think to position, people need to continue to stay patient while we kind of wait this sentiment out and how these narratives are going to fall, right? But I also think that it might be time to be putting in capital on dips. So kind of a nice mix of that, I think is the right approach from here with the way things are starting to play out.
I know in Bitcoin, I'm going back into accumulation mode and not so much like dip buying mode because we don't have an established trend yet. But there's a lot of things actually pointing bullish for Bitcoin right now. Basically, all of the on-chain factors, and I covered this in my latest YouTube video, but all of the on-chain factors are showing oversold and rolling over. So the risk is much lower buying Bitcoin today than obviously at 69K. And if we look at the charts, which we'll do here in a second, I mean, the logarithmic growth and a lot of the technical indicators are showing that, hey, this could be a potential bottom, right? And it's always hard to know where a bottom is, and it's never confirmed until after the fact, right? So what could be the bottom is the panic in November when FTX went under. That was a high volume capitulation point. And as of right now, Bitcoin hasn't broken that. And so what do we like to see looking for bottoms? Well, we like to see price way off of all-time highs, one. Number two, we like to see on-chain fundamental metrics flashing oversold and back into the buy territories, which we have. We also like to see market sentiment in really, really fear negative territory, which we've been for the past couple of months. So I think, again, it's impossible to know if this is the bottom, especially because Bitcoin is so correlated to the stock market right now. But there's a lot of stuff that's pointing bullish. And if we take a look at the chart, I mean, this is just the logarithmic, kind of exponential chart. And a lot of the indicators that we can pull up on the on-chain data is just really confirming and signaling that we are in the buy zone. The big thing that I'm looking at, though, there's a very key price level here, which is 25K. And I'm not convinced that we're going to break that right away. If anything, I think it would be better and healthier for the markets if we consolidated inside of like 19 to 25K on this side of the chart, basically giving us like a really big inverted head and shoulders pattern. So that would likely correlate with a pullback in stocks as well. But it could also be like a 2019 type rally where we get overextended. And if we do break 25K pretty quickly, I think that could lead to kind of the next extended bull market. But if I were to guess, and again, I have plans for whatever plays out, but if I were to guess, I think we're going to chop around for at least a couple of months. But again, there's that big what if of what do stocks do, because it is just so damn correlated right now.
I guess the thing that could happen that maybe people wouldn't expect and they wouldn't be positioned in Bitcoin if this happens is, I'm watching the S&P 500 price action right now, and I mean, if you didn't tell me what was going on in the world, I would say we're running higher, right? But I know the fundamentals, so it's a little bit different. But the technicals are really set up nicely here, and it's very possible that we could see a basically shorts get squeezed in the S&P maybe over the next few weeks. That doesn't mean that's going to last. So that could end up maybe happening in Bitcoin too, like a fake out breakout type of situation. But in relation to your comment about the pullback and kind of creating that inverse head and shoulders, I agree that would definitely be the healthier way to go. So what I think people need to do though is, because like you mentioned, it could be months, right? It could be months of price kind of pulling back, consolidating, then that retest. That's where I say like people have to be prepared uh for those times, and have a plan of action for if they're going to be adding it on dips, if they're going to be shorting into pops, like there are a few things that could be happening, and people just need to get prepared for that, because I think now we're going to really need to be taking action in 2023, I think.
Yeah, I actually surveyed, to your point about like just being able to scale in and think in multiple possibilities. I was curious what my Twitter followers kind of think about and how they buy Bitcoin, right? The four options were, so I asked, how do you buy Bitcoin? The first option was dollar cost average. Second option was accumulate during bear markets. Third option was short-term trades. And then whatever psychopaths don't buy Bitcoin.
That's not
No,
nice.
so I know. But listen, I think Bitcoin is a vital part of a portfolio, even if it's a tiny allocation. Get off zero, as we like to say. But anyway, how do you buy Bitcoin? The number one thing that people said, almost half of my followers at least, said they accumulate during bear markets, which I think is great, right? That's the most profitable time to do it. The second most popular option was dollar cost average, right? About a little less than a third of people said that. And then, about 7% of people said only like short-term trades. So I think that's a good strategy to have, right? Accumulate during bear markets, and then you can trade on the way up if you have an established trend. And hey, if you don't want to overthink it and you just want to dollar cost average, there's nothing wrong with that too. How do you guys think about that in the like terms of stocks?
Trav, I was going to say it's kind of hilarious that accumulate during bear markets is going to be the answer for crypto people, because stock people, no, they're not. They're the opposite. They're like, they're doing the opposite. It's just funny. I mean, not all of them, but the general idea, right, Travis? Like most people are selling the bear market and not accumulating the bear market out of fear.
Yeah, we even saw institutional investors being pretty underweight stocks to start the year, and that didn't work out very well. And you had a lot of funds, I think, chasing the rally late. So, yeah, you can see that even in the most recent run. But yeah, I mean, I think there has been at least some movement to help people understand that, buying when prices are low and valuations are better is a good thing. So I have seen, or at least we've tried to educate people on accumulating when prices are cheap, so to speak. But most people psychologically have trouble doing that. I think most people psychologically are going to try to wait for the all skies are clear, and by that time, equity markets have probably rallied significantly for months, because the markets will rally well before earnings have bottomed. They'll rally well before the economy has bottomed. So it's always important to remember that. That being said, when you think about like the signs of a market bottom in stocks, like we haven't seen that many. We have had some periods, obviously, where the market pulled back a lot, credit spreads widened. That would be one of those bottom signals, but it didn't really last. Valuations aren't really signaling bottom. The Fed is still tightening, not easing. So typically you would see the central bank starting to ease as we get closer to a bottom. So it's not really aligning with a lot of the indicators, so to speak. So important to point that out. But yeah, I like that that people are at least recognizing that, hey, when stocks go on sale, maybe that is the time to start to dip the toe in the water, especially if you're young and you have lots of income and capital to invest over the coming decades. Doesn't mean you buy everything. Like, you don't necessarily want to buy stuff that's on the verge of bankruptcy, but, especially quality companies and the situations where the valuations have gotten really reasonable and balance sheets are healthy. Like, I love that. That's my favorite way to invest.
So you don't think I should go all in BBBY? I take it.
Do you guys want to talk about BBBY and what's happening
But
there?
before we do that, on the idea of buying stonks, I just want to share you guys another survey that I did this week. And I was just curious, of my Twitter followers, I asked, do you own stocks? 49% said no.
That's about right, actually.
That was way higher than I expected. What do you mean that's about right? Is that what you would expect?
I believe 44, 45% of Americans don't own stocks. About 50% of Americans do via individual stocks or 401k. A lot of people don't even know they have exposure to stocks in their 401k because they don't know what their 401k is even doing. And that sounds crazy, but trust me, I've talked to these people. I know.
Wow.
Yeah, that's actually about right.
Yeah. I know in the crypto space, I've talked to a lot of people that don't own stocks because they either think stocks are a scam or they live in a country where they don't have easy access to the American stock market or European markets or the Australian markets. But yeah, I don't know. I think stocks are obviously just a really key part of a portfolio, even for crypto people that are hardline like Bitcoiners. Like, just understand, like, and we've said this 100 times on the show, but it makes sense to own pieces of the most profitable companies in the world. And I think it can act as a complement to your crypto holdings. Even if you are all in on crypto and you love crypto, like, owning stocks, I think, can help smooth out your returns and help during the bear markets where we have 70, 80, 90% drawdowns. You're not going to get that with stocks. So that's just my opinion. I was surprised by that, but yeah, I don't know. Just like I think everybody should own some Bitcoin, I think everybody should have exposure to the stock market.
I agree.
Yeah. So let's talk about BBBY, some of the big flyers, some of the meme stocks that are back. Yeah, I don't know.
Meme stocks are back. So
Apparently-
strange.
Apparently, Meta is basically a meme stock, judging by the way it moved last week.
Yep.
Yeah, that was nice to see, though. We're
that
meta
was-
bulls. Well,
that
I'm a
was-
meta bull.
That was one we accumulated during the Meta bear market, and we've done pretty well on that so far. But
where did you guys buy? I'm going to call it Facebook. It's not Meta, it's Facebook. Where did you guys buy
I can't believe
Facebook?
I'm even calling it meta.
Well, we've been dip buyers of Meta off and on since like 2019.
Yeah.
And so I reestablished a larger position late last year, like around the fall timeframe. I even mentioned on the podcast a couple times that I had been accumulating some Meta, like around, I think, 90 to $100 or so. And I didn't catch the exact bottom, but I was reasonably close. And the sentiment at the time, of course, was horrible. Meta had come off reporting a couple of just really putrid quarters, expenses growing way faster than revenues, not only in the metaverse spending, but also in the core business. And people were worried about the ad business declining. They're worried about, of course, TikTok stealing all of Meta's users long-term. So a lot of short-term and long-term worries for Meta back then. Amazing how price can change sentiment, though. Meta helped that, of course, by saying that they're committing to 2023 being the year of efficiency. And so they dialed back their CapEx and their operating expense guidance for 2023 by a total of 9 to 10 billion, which is significant. They went from essentially having like zero free cash flow in the third quarter to having 6 billion of free cash flow in the fourth quarter. They also re-upped their buyback authorization. So they authorized another 40 billion of buybacks. I think they bought back like 7 billion in the fourth quarter. So now people will say, oh, Meta stock was only up because of the buyback announcement. Well, no, the biggest thing was that they're finally getting religion on costs, which we had talked about needing to be happen, because they went from being one of the most profitable businesses in the world to shooting themselves in the foot and wiping out their Q3 free cash flow. So they are moving in the right direction. The market likes what they see, and they rewarded Meta stock. I was surprised. It was up 25% on the day it reported earnings. That was more than I even expected. But yeah, that one has had quite a bit of volatility, similar to Netflix. if you were able to see past the short-term narrative and see the levers that the company had available to them to pull, you could look out on a slightly longer time frame and make the call that it got too cheap. So that's what we did. And knock on wood, we don't always get them that right, but we've had a couple of really nice calls on stocks like that over the past few months.
Great job. Yeah.
Yeah, thanks. Now, Bed Bath Beyond.
Hey,
let's
talk about the big one.
We're not calling the bottom or buying the dip on that. That's a whole different story.
I haven't touched that one. I kind of wanted to trade it the other day, but ended up saying nah.
Yeah,
and
so
I'm glad I did.
Yeah, that was the right call. I mean, just to put it in context for everyone, Bed Bath Beyond, the business is in horrible shape. You know, sales are declining 30 to 40% versus last year. They've been closing stores, still burning cash. They burned $400 million in the third quarter, which they reported. And basically, they missed an interest payment on their bonds at the end of January, which typically signals that the company is either headed for bankruptcy or restructuring, or is, you know, negotiating with bondholders to try to deal with that. You know, they have 1.9 billion of debt on the balance sheet. So untenable financial position for Bed Bath Beyond. And it was signals pointing to the fact that they may file for bankruptcy within days at the end of January. Then the stock on, what was it, like last Monday, doubled or more than doubled in value, even though Bed Bath Beyond was potentially on the brink of a bankruptcy. And of course, we know that there were probably some insiders that were pushing that stock up, because there was a big announcement made by Bed Bath Beyond after the market closed that they were attempting to raise a bunch of new Series A preferred stock. So they're going to issue up to almost 800 million new shares and try to raise just over $1 billion of capital through these share sales to institutional investors to try to stave off bankruptcy, to try to pay down some of the bonds, pay down some of the debt, and try to go forward with the restructuring without having to go into bankruptcy liquidation. And so this is kind of that last Hail Mary that Bed Bath Beyond is throwing. And if it succeeds, maybe they avoid bankruptcy, but there's still a good chance they may not succeed. Of course, the stock, you know, is down from $6 on Monday to less than $3 today. So it's actually down now on the week. It's down 20% on the week, even though at one point on Monday, it was more than a double. It's just crazy.
Yeah, this is such a wild chart. Like if we zoom out and take a look at the weekly chart, I mean, you can see this thing has just been beat to death since 2015. Had, you know, a little like sympathy rally during the bull market of 2020. And when you zoom in and you look at on even a daily chart, the move just from the past month, it's not that impressive. This to me looks like a junk penny stock chart where, you know, you get anywhere from 1 to 3 days of green. And yeah, how crazy is it that on Monday the 6th, it was up, you know, 90 to 100% in a day. And then, like you said, in the after hours, it came all the way back down. And you have to actually zoom in intraday to see this was the run during regular market hours, and then after hours just collapsed all the way back down. And I think this just kind of highlights the danger of trying to chase shit companies, right? And this also is true for cryptos. You know, low volume, really high risk stuff. Like, yeah, you could see momentum one day and then the next day it just completely gives it all back.
I think it's really interesting that the meme stock traders have chosen such crappy businesses. Now I know the reason, of course,
short interest,
yeah,
right? That's
exactly.
why. Yeah.
That is why. But, you know, maybe choose some businesses that with a little bit more turnaround potential.
Yeah,
I don't know.
they need to learn to combine the fundamentals with the technicals, and like in the right way. Like with like Abercrombie and Fitch, right? That was a business that was turning around with a high short interest.
Uh-huh.
Right? Like Bed Bath & Beyond's not turning much around right now. Like maybe GME was like the closest thing to a turnaround, but I don't know. Yeah, it does seem like they have a hard time picking good ones.
Yeah, well, and then come the conspiracy theories and the, you know, that whole issue with like confirmation bias, where they're only seeking out others' opinions that align with their own preconceived biases. Like they won't look at the situation objectively and go, oh yeah, you know, Ryan Cohen left. The management has been a disaster. The numbers still aren't good, yet somehow they expect some miracle acquirer to appear out of nowhere to offer an offer for the company for 500% more than where it's trading to screw the shorts, you know. it's one of those situations we talk about. You don't want to get too married to a thesis where you're ignoring the objective results, right? Like, don't ever become part of a stock cult that you get so wrapped up in it you can't see the objective truth. That's really important here.
I guess I would say Nordstrom is one of the better ones to be a meme stock because it does have, like, it's a good business, right? It's not a crap business.
Yeah, interesting that you mentioned that, right? Because Ryan Cohen, who was previously involved in the GameStop and Bed Bath Beyond squeezes, is apparently, according to the Wall Street Journal, building a stake in Nordstrom. And Nordstrom, we had noticed that it was trading weird because they had a pre-announcement of their Q4 results a couple of weeks ago, and it looked weak. They came in below expectations. They're having some issues with their Nordstrom Rack business, and so they guided lower, but the stock was moving up, and we're like, what's going on? Turns out we think it's because Ryan Cohen was acquiring some stake there, and so he's looking to, I think, make some changes to the board, and maybe that helps Nordstrom turn around. They've been in need of a strong turnaround for a couple of years now, but yeah, at least the business is at its core still profitable. That has got to help.
Yeah.
Interesting. So are we going to have like another meme stock season, or is this just kind of some individual, like short-lived pop and flops?
Last week, it looked like we were back in meme stock season, and particularly in the AI category, any stock that had anything to do with a chat bot or AI or putting out any press release related to AI was up massively. So we've seen some popcorn pops even this week still happening in that area of the market, but is it sustainable? I don't know. Nikki, what do you think?
Well, the argument is that if there's speculation like this still happening, that the bottom in the market isn't in, I don't really know how to, pin that in there and put that into the mix. But I think that a lot of stocks got really beaten down and short interests got really high on many things. So I guess it kind of makes sense, from a trading perspective that this is happening right now. I think it's probably going to be maybe a short season. We maybe won't see a 2020, 2021 type situation here. But again, this is how it normally happens in normal market conditions. It's supposed to be pretty quick. It comes and it goes, similar to like how biotech stocks like have their pops and flops, right? This is what the trader environment normally feels like. So to me, it kind of feels normal having those like pockets of quick pops, quick squeezes, but they don't last and sustain and go as far as what we saw in 2020. And that is what I think people are missing here is now we're back in a more normal, quote unquote, day trading, swing trading environment. So you got to take your profits a lot quicker because the market environment is not like what we've seen in the past, I don't know, 5-10 years.
That's a great point. Yeah, when you have a bull market behind you, like in 2021, it's a lot easier and things can go a lot further. Like you said, that's a really interesting point. Chris, you always say that as well, like know what market cycle you're in. That can tell you often what kinds of trades to take and position sizing and timelines on your trades, right?
Yeah, the overall market conditions are kind of like a river, right? You can either sit in a tube, grab a beer, sit back and let the river take your positions to new heights, right? Or you can sit there and fight against the tide and swim and really not make any progress. And so that's what I like to do as a trader is like look for those moments where the tide is just in my favor and I don't have to do much to make a lot.
One meme stock trade that we should mention before we get off the topic, Blue Apron, our favorite meme stock that we've been tracking for years now, waiting for this turnaround. We like the CEO. We like some of the product moves they've made. They just haven't gotten enough traction in total subscriber growth. But the stock chart was looking pretty interesting over the last few weeks. We started to see some pickup in volumes, pickup in option volumes. The price was moving up. I think we still need to keep an eye on this one. This one could have potential still just because they haven't filed a press release indicating when they're going to report Q4 earnings yet. in the past 3 or 4 years, they would have filed that press release in either late January or the first week of February. We're now beyond the first week of February, and there's no press release from Blue Apron. So look, I don't know if it means that they're in talks to be acquired or pull off some big financing package, but the fact that the company's been so quiet and it's already the second week of February is unusual. So that's one I'm definitely keeping an eye on. I know, Nikki, we've been on and off with that play at various times, trying to catch a big squeeze, but definitely one to watch.
Cool.
Agreed.
Well, we'll keep our eye on popcorn season. It looks like both crypto and stocks are having their own little kind of mini rally here. And that's what I like to see is like if crypto and Bitcoin can start to buck the trend of what's happening in just the NASDAQ, that's where I start to get excited because you know that there's actual fresh money coming into the space. Talking about fresh money coming into the space, tell me if you guys heard about this. The UK is planning their own CBDC, central bank digital currency. They're going to call it Britcoin.
I love it. I love that. I think it's
branding.
adorable.
Yeah, it's actually not bad branding. I hate it, but I like it.
It's cute.
But how funny is this? They're already planning a 20,000 pound limit for individuals holding digital pounds, right? Look at this. How funny is this? You're trying to sell the public on your shitcoin fake crypto, and you're already imposing limits, right? Like, what do people think is going to happen with these CBDCs? Governments are going to have a field day placing limitations and freezing accounts. I mean, you know, power knows no bound to ridiculous limitations and trying to just control people's lives. So I think that this is actually bullish for Bitcoin over the long run. You know, we've said this for many years, but I think as people start to see these just ridiculous limitations in CBDCs and some of the stuff that these governments do, they're going to realize like, I don't want to hold this shit at all. This is ridiculous. And I think it's just going to educate more people on cryptocurrency, and they're going to clearly see the value of Bitcoin versus all of these government fake cryptos.
Can I play devil's advocate for a second?
Please.
Could the benefit, though, be the ability for the government to like make direct, quick stimulus tax refund?
Yes, but it also gives
deposits?
it also gives them the ability to make quick, fast freezing and
Right.
moving your money. So yeah, I mean, could people get addicted to it, and could they get hands into the or money into the hands of people? Sure, but it's still I don't know. It's really sketchy.
Like the government's version of Venmo. Kind of.
Yeah, except
they can take from it.
They run the code. They decide who gets digital credits, and
so you'd have to get the money real quick and then convert it.
Buy Bitcoin with it.
Immediately.
Get the CBDCs and buy Bitcoin.
Just if you have CBDC in your account, don't ever let it stay there. Get it off.
CBDCs are the next FTX.
The one thing I like that comparison.
Yeah, it's literally it could go away overnight, you know.
Well, and the one thing that gives me comfort around CBDCs is if we look at organizations like the IRS or any other federal government organization, really, they're run so poorly that I don't even know if they can pull off a CBDC.
Probably not.
Yeah,
probably not.
You know, everybody gets a wallet, and then all of a sudden they wake up one day and it's just broken. And yeah, I mean, the problems are going to be boundless. And I think I'm not threatened by them. I just think people are going to see the bullshit.
Mm-hmm. I sure hope so.
Yeah. But talking about seeing through the bullshit. I wanted to do a quick plug for our community. You know, I notice every time that the social metrics start upticking, with new people paying attention to, crypto charts or keywords starting to increase in popularity, and you get social metrics that increase, a lot of people start looking for ways to learn how to trade and invest the right way. If that's you, come join us. Check us out at wetalkmoney.com/community. And we have a promo code where you can get your first month or quarter half off. Nikki, what's the promo code?
It is Build Wealth. And also, just to talk about my wealth coaching meetup that we're having for the Skill Incubator community on the 17th of February. So if you get into the community, you'll have access to get into the meetup. Community members get together. We're going to be talking about asset allocation. We're going to be talking about basically like anything that the community wants to chat about around wealth building that goes beyond just making the trade, right? We're talking about strategy. So we'll be doing that on the 17th of February if anybody wants to get in and get access to that.
Yep. So wetalkmoney.com/community, and then Build Wealth, all one word, is the promo code. Yeah. So with that said, I think next week we'll get to a bunch of questions. We can start to wrap it up here. I just wanted to say, I think that we are in a really key moment in time in Bitcoin and crypto. I'm starting to get really excited again because I think I don't know if the low is in. I see reasons why we could have already put a low in, and I'm prepared. I've been buying some over the past 6 months, and I have a lot of capital ready to go. So now is the time to prepare. Now's the time to start focusing, planning your trades, getting your capital ready, setting up your wallets, exchanges, all that good stuff. What about you guys? What are you excited about or looking forward to over the next week? I know we've got inflation data. Is it this week? Tomorrow?
Next Tuesday.
Next Tuesday. What's tomorrow? There's some big news event coming out this week.
On tomorrow's economic calendar, we got the weekly jobless claims. We got some inflation data coming out in the EU. But yeah, that'll be interesting to watch tomorrow. But there's also earnings still going on. So we've got some, big companies reporting earnings still, like PepsiCo, PayPal, Lyft, Expedia, and others. So we've got, a busy calendar for sure. Like keeping up with it every day is fun but challenging. So yeah. But inflation's going to be the big one next week. Inflation's going to be the big one, the CPI data that comes out on Tuesday, because, that really just sets the tone for how the Fed is thinking about rate setting and how the market is thinking about the trend of inflation and rates, which matters a lot for every asset. So yeah, that's going to be a big one. And beyond that, yeah, I mean, we've got trades hopefully to take, like another reason to be part of our community, because we've been winning pretty nicely so far over the last couple of months. Not to toot our own horn, but we've definitely been back on the hot streak. So yeah, looking for opportunities for sure. Nikki's hunting the charts again, and we're combining the fundamentals and the technicals to try to find good setups.
Yeah, it's swing trade season right now. This year in general, I think that we're going to see a lot of good swing trading opportunities. Now, we'll see what the broad market does, because the S&P is the big kahuna that dictates if swing trades are actually going to work or not. But this past month has been a really great month for being able to take some profits and get some more cash in the portfolio, just to be prepared for if the market does pull back.
Yeah. And also in altcoins, I mean, there are a ton of charts that are setting up for breakouts, but the big question is does Daddy S&P
exactly
let them break out, right?
Exactly.
Because S&P has been dictating Bitcoin has been dictating altcoins, except for in the popcorn season, the AI stuff that, there's a few that have been bucking the trend. But as we talked about earlier, and as you saw with like the BBBY chart, like you just got to be really careful chasing. You have to be quick. You have to be disciplined and really understand risk management if you're going to be taking shorter term trades in this environment. So
well said.
Awesome. Well, guys, we'll go ahead and wrap it up there. Again, go to wetalkmoney.com/community. Use the promo code Build Wealth, and go to wetalkmoney.com. Submit a question for the show. Next week, we'll do a bunch of Q&A. And yeah, any final thoughts or anything you guys want to add before we wrap it up?
No, I think we covered everything. Yeah, send us some questions for next week. We love doing the Q&A.
Yeah.
shows.
And also let us know if you guys want to see us do these live. I know we've been doing a lot of pre-recorded shows, but if you want to do some live streams, send us a tweet and let us know.
Absolutely.
Cool. All right, guys. Well, thanks for joining us, and we will see you next time. Take care.
Cheers.